Broker Moves is brought to you by FNArena. Insights, data, quality over noise. Subscribe now at FNArena.com.
All right, let's turn to broker moves. Jarden anticipating strong first half earnings for WiseTech. The broker expecting the logistics company to deliver around $650 million in first half revenue, adding that new contract wins and a faster rollout of CargoWise may drive better than expected results. Jarden has a neutral rating on the stock but has hiked its target price to $74. RBC Capital Markets says it remains cautious on Amcor ahead of the company's quarterly results in early February. RBC warning of high debt levels and rising net interest costs, adding that packaging volumes are likely to remain under pressure through to mid-2026, pointing to weakness in the US labour market and a potential increase in healthcare premiums. RBC has a $68 target price on the stock. And Citi has downgraded Treasury Wine Estates to a sell, flagging further US distribution concerns. One of Treasury Wine's US distributors has said it's considering divesting operations in 7 states, including 5 where the company operates. To quote Citi, this is, quote, not the news the company needed to start 2026, with the investment bank having a $4.80 target price on Treasury Wine. Jefferies, meanwhile, flagging soft liquor demand and trimming its forecast for Endeavour, saying this would affect all liquor retailers. The broker cutting its earnings per estimate forecast by 25% to 23 cents.
Broker Moves is brought to you by FNArena. Insights, data, quality over noise. Subscribe now at FNArena.com.
Let's take a look at broker moves now and see where upgrades and downgrades are setting the tone for some Aussie stocks. Rudy Philippek Van Dyke from FNArena joins me now. Rudy, I just wanted to get your overall view. Happy New Year, first time I've spoken to you this year, on where we're seeing markets, particularly as we've got this commodity boost coming through here and US markets have been at or near records.
Yes, we have entered 2026 very much on the same level as we finished the previous year. It basically means that those stocks who were out of favor up until the third quarter of last year, and that's cyclicals and commodities, they're now back in favor. And those stocks who were in favor up until then, they remain out of favor today. So those who are have portfolios stacked with quality growth, technology, AI stocks, they're not wearing a smile when they get out of bed every morning in 2026 just yet.
All right. Well, I hope you're wearing a smile, Rudy. Let's have a look at what we're seeing in some of the broker moves in particular. Kicking it off with Computershare. What are we seeing there?
Well, what we are seeing globally is that there's a lot of deals being lined up, and we're thinking of a lot of IPOs are coming to the market. In the US, the danger might actually see that we see too many of too large a size, and that they suck a lot of capital out of markets. But also locally, we should see quite a number of IPOs readying and coming to the market. All else being equal, for a global leader like Computershare, that should bode well. I have to say that usually the company that is identified as a major beneficiary is also Macquarie Group on that same thematic. But that's coming back to Computershare. That's the reason why Citi has upgraded its rating on Computershare, on the expectation that all that activity in the deals is going to translate, at the very least in the short to medium term, in higher numbers for Computershare.
Yeah, another one that we've been looking at a lot is Endeavour here. So many movements here. We've been looking as well in terms of how much we're kind of spending in this space too. Ord Minnett has downgraded this stock. What's the reasoning there?
Well, there's a lot happening and also on the global scale when it comes to spirits, wine, and other alcoholic drinks. And while they're not necessarily a large producer, they are a little bit of a producer, but not really. They are obviously a distributor and a seller of the products, and they have been on a lot of pressures ever since they separated from Woolworths. One can see that very easily by just taking a multi-year view on the share price. Now the discussion, of course, is, has the share price now sank low enough or not? Ordminet clearly is taking a much more subdued view. Their price valuation target is $3, which is still well below where the share price is today, hence a downgrade. Their view is that discounting across the sector is out of control of management. They simply have to discount as well, not to lose market share, and that means that the numbers really don't look great. Offsetting the pessimism by Ordminet, I have to add that Citi also upgraded this week, not downgraded, upgraded. And they're taking the opposite view. They think that this is rock bottom here. The situation is unlikely to get any worse. And so they have obviously a higher valuation and a better rating. Pick your pick. In the meantime, there's 4.5% on dividend yield on offer.
You know what else is always on offer? Winning the lottery and changing our lives, Rudy. It looks like Macquarie is positive on Lottery Corp, although I think I saw Jarden maybe out today saying they were not so positive. But tell us what Macquarie's saying.
Well, Macquarie is stating the obvious, although that may not be so obvious to a lot of investors, and that is that lotteries and jackpots, they are cyclical as well. And often they are described as a almost like a solid defensive exposure, but there's a lot of cyclicality going on behind the scenes. Of late, the operations haven't shut the lights out, and I'm being quite accommodative here. So the share price has not really performed. Macquarie, on their observation, the valuation here on a relative basis is near its lowest point in 5 years. They think that's exaggerated. Things will improve because it's cyclical, and if you believe in that thesis, then this is a great buy. Hence the upgrade.
Yeah, and I just found that Jarden note so quite interesting going the other way. Rudy saying they think the revenue will be about 1% lower than last year and 5% below consensus because of jackpot weakness. So again, like the lottery, take your pick there, I guess. And also what we saw yesterday, Rudy, was that really interesting call from Morningstar. It's going to be mining, merger, M&A. We've got this potential Rio Glencore bid. So much in terms of the commodity boom. Is that sort of what all analysts are thinking, that this is going to be a great year for resources?
The great year for resources has been mentioned ever since late 2024, and that's finally coming to the fore. The whole merger acquisition thesis, that's predominantly triggered by Glencore, who really wants to merge with Rio, and Rio Tinto management is so far not against it. If they do get together, they will become the world's largest in the sector, and it is widely seen that BHP. There's maybe a little of ego in play as well. They will try to take back the mantle of number one in the world. So maybe watch this space.